What is happening, Crypto Nation? Buckle up because the news cycle is absolutely on fire, and if you're not plugged into Bitcoin Bulletin, you're missing out on the moves that are shaping the future. We've got updates that are so big, they're practically seismic, and we're diving deep into every single angle, right here, right now. Get ready for some game-changing information that you absolutely cannot afford to miss. First up, a massive development is set to redefine how we interact with digital assets, bringing a familiar player onto the Bitcoin network in a way that promises unprecedented privacy and utility. Imagine having your favorite stablecoin not just on a sidechain, but natively integrated, allowing for transactions that are both lightning fast and completely shielded from prying eyes. This isn't just an upgrade, it's a revolution in how we think about stablecoin utility and Bitcoin's potential as a payment network. We're talking about a move that could fundamentally alter the landscape, making Bitcoin more versatile than ever before. Then, we're shifting gears to analyze a strategy that has been a cornerstone of many portfolios, but is now facing intense scrutiny. Is a particular company's bold approach to holding Bitcoin truly sustainable in the long run, or are we witnessing a model that's showing signs of strain under pressure? We're breaking down the financials, the market sentiment, and what it all means for the future of corporate Bitcoin adoption. Following that, we're zooming in on the charts and the on-chain data to pinpoint the critical levels that every investor needs to be watching. Q4 2025 is on the horizon, and the signals are pointing to a pivotal moment where key metrics could dictate the next major price movement. Get ready for a deep dive into the technicals that matter most. And finally, we've got a rare signal emerging from the very engine of Bitcoin itself, the mining network. A powerful indicator, historically tied to major price cycle turns, is flashing a significant pattern that suggests a major shift in mining power is underway. What does this mean for network security, profitability, and the future of Bitcoin mining operations? We're breaking it all down. You don't want to miss a second of this. Hit that subscribe button, ring the notification bell, and let's get into it. Stablecoin giant integrates natively with Bitcoin. Get ready for a seismic shift in the digital asset world as Tether, the issuer of the world's largest stablecoin, USDT, announces its groundbreaking plan to deploy on the RGB protocol. This integration isn't just another update, it's a fundamental reimagining of stablecoin utility and Bitcoin's capabilities, promising private, native transactions directly on the Bitcoin blockchain. For years, the conversation around Bitcoin has often centered on its role as a store of value. However, this move signals a powerful resurgence of Bitcoin's potential as a robust payment network, capable of handling complex financial instruments with enhanced privacy and efficiency. The RGB protocol, a cutting-edge layer designed for smart contracts and asset issuance on Bitcoin, operates on a client-side validation model. This means that transaction data is validated directly on users' devices, drastically reducing the amount of information broadcast onto the main Bitcoin blockchain. This approach not only minimizes blockchain bloat, but also unlocks a new level of privacy for users, as balances and transaction flows are not publicly exposed. Tether's integration with RGB v0.11.1, launched earlier this year, will allow USDT holders to store and transact their stablecoins alongside their Bitcoin holdings within the same wallet. This is a significant leap forward in user experience and utility, especially for those operating in environments with less reliable internet connectivity, as RGB supports offline transactions. The RGB Protocol Association has enthusiastically welcomed this partnership, highlighting its potential to foster deeper integrations between the Lightning Network and the Bitcoin network. This synergy could enable instant settlements through RGB's transport extensions and leverage the Lightning Network's inherent privacy features and client-side validation capabilities. While Tether has not yet provided a specific launch date, their development teams are reportedly working closely with RGB developers to bring this feature to fruition in the near future. With USDT boasting a market capitalization of approximately $167.33 billion, its native integration onto Bitcoin via RGB is poised to have a profound impact. Tether CEO Paulo Ardoino emphasized the transformative potential, stating, "With RGB, USDT gains a powerful new pathway on Bitcoin. This development aligns with Tether's broader strategic initiatives, including strengthening its product offerings and enhancing its advisory board with experienced figures from the crypto space. Experts are suggesting that this move could significantly reduce the reliance on alternative blockchains for stablecoin issuance, thereby bolstering Bitcoin's position as a premier global settlement layer. By enabling users to send and receive USDT alongside BTC in a single wallet, the integration expands the practical use cases for Bitcoin, from facilitating cross-border remittances to supporting daily transactions in economies grappling with high inflation. As more wallet providers and exchanges adopt the RGB 20 standard, the Bitcoin network is set to evolve into a more versatile and trusted platform for global digital finance. But is this innovation enough to challenge the status quo? Stick around as we explore the potential impact and what it means for the future of digital finance. MicroStrategy's Bitcoin Treasury model under scrutiny. In the rapidly evolving world of cryptocurrency investment, few strategies have garnered as much attention as MicroStrategy's aggressive accumulation of Bitcoin. For years, the business intelligence giant has been a vocal proponent of Bitcoin as a primary treasury reserve asset, leading the charge in corporate adoption. However, as market conditions fluctuate and the company's financial performance is closely examined, questions are beginning to surface about the long-term sustainability of this bold strategy. MicroStrategy's approach has been characterized by its significant leverage, often using debt financing to acquire vast amounts of Bitcoin. This strategy, while potentially amplifying returns during bull markets, also exposes the company to considerable risk during downturns. The core of the debate lies in whether this model can remain viable through various market cycles, especially in a volatile asset class like Bitcoin. Analysts point to the company's substantial debt load and the fluctuating price of Bitcoin as key factors that could test the resilience of its treasury model. While MicroStrategy has consistently demonstrated a strong conviction in Bitcoin's long-term value proposition, the practical implications of managing such a large, leveraged position are complex. The company's financial reports often highlight its Bitcoin holdings as a significant asset, but the unrealized gains and losses associated with these holdings can create substantial volatility in its balance sheet. This volatility can impact investor sentiment, credit ratings, and the company's overall financial flexibility. Furthermore, the ongoing debate about Bitcoin's future price trajectory and regulatory landscape adds another layer of uncertainty. Some critics argue that MicroStrategy's heavy reliance on Bitcoin makes it overly exposed to the crypto market's inherent risks, potentially overshadowing its core business operations. Others contend that the company's proactive approach and unwavering belief in Bitcoin position it to capitalize on future growth, making its strategy a pioneering example of corporate digital asset management. The sustainability of this model hinges on several factors, including Bitcoin's ability to maintain its value and grow over the long term, MicroStrategy's capacity to manage its debt obligations effectively, and its ability to adapt to potential regulatory changes. As the market continues to mature, the success or failure of MicroStrategy's pioneering strategy will undoubtedly serve as a crucial case study for other corporations considering similar approaches to digital asset adoption. The company's ability to navigate both the opportunities and challenges presented by its Bitcoin-centric treasury strategy will be closely watched by investors, regulators, and the broader financial industry alike. But what do the charts tell us about where Bitcoin is headed next? We're diving into the key levels to watch. Bitcoin's Q4 2025 crossroads, key on-chain levels to watch. As the cryptocurrency market continues its dynamic dance, all eyes are on Bitcoin's on-chain data, seeking clues to its future trajectory. With Q4 2025 on the horizon, a critical juncture is approaching, marked by several key on-chain levels that analysts believe could dictate the next significant price movement. Understanding these metrics is paramount for any investor looking to navigate the complexities of the Bitcoin market. On-chain analysis involves dissecting the data directly from the Bitcoin blockchain, providing insights into user activity, transaction volumes, miner behavior, and the flow of Bitcoin across various wallets and exchanges. These metrics offer a transparent view of network health and investor sentiment, often serving as leading indicators for price action. One of the most closely watched metrics is the net unrealized profit loss, NUPL, which measures the difference between the market capitalization and the realized capitalization, divided by the market capitalization. A NUPL above a certain threshold can indicate market euphoria and potential tops, while a low NUPL might signal capitulation or accumulation phases. As Q4 2025 approaches, observing the trend in NUPL will be crucial. Another vital indicator is the spent output profit ratio, SOPR, which reflects the profitability of spent Bitcoins. A SOPR above 1 suggests that coins spent on that day were, on average, sold at a profit, indicating strong demand and bullish sentiment. Conversely, a SOPR below 1 indicates losses, often seen during market corrections. The behavior of long-term holders, often referred to as hodlers, is also a significant factor. Metrics like the percentage of supply held by long-term holders and their transaction activity can reveal whether experienced investors are accumulating or distributing their holdings. A sustained increase in long-term holder supply typically signals conviction and may precede price appreciation. Furthermore, exchange net flows, which track the movement of Bitcoin into and out of exchange wallets, provide insights into potential selling or buying pressure. Net inflows can suggest increased selling intent, while net outflows might indicate accumulation or a shift to colder storage, signaling a bullish outlook. The strength of miners, measured by their hash rate and on-chain behavior, also plays a critical role. Monitoring miner selling pressure and their profitability can offer clues about their confidence in the market. As Q4 2025 looms, these on-chain metrics collectively paint a picture of the underlying health and sentiment within the Bitcoin ecosystem. Investors and traders will be closely monitoring these levels for signs of accumulation, distribution, and potential trend reversals. The confluence of these indicators could provide valuable insights into whether Bitcoin is poised for further gains or a period of consolidation as the year concludes. The anticipation surrounding these key on-chain levels underscores the importance of data-driven analysis in making informed investment decisions in the volatile cryptocurrency space. But the story doesn't end with charts and data. The very foundation of Bitcoin is shifting. Stay tuned for mining news. Rare Bitcoin hash signal points to mining power shift. A significant and historically telling signal has emerged from the Bitcoin network's hash ribbon, an indicator closely watched by market participants for its correlation with mining power dynamics and potential price cycle inflection points. This rare pattern suggests a notable shift is underway in the distribution of mining power, with major players like IREN Limited making strategic moves that could influence the broader cryptocurrency market. The hash ribbon indicator is derived from the blockchain's hash rate, which represents the total computational power dedicated to securing the Bitcoin network. By analyzing hash rate distribution across different timeframes, the hash ribbon can flash patterns that historically coincide with crucial moments in Bitcoin's market cycles. While not a direct price predictor, its appearance is often seen as a signal of underlying network health and potential shifts in miner sentiment or operational strategies. The recent rare flash observed in the hash ribbon has coincided with robust performance from leading mining firms. IREN Limited, formerly Iris Energy, has reported impressive financial results, including a substantial annualized Bitcoin mining revenue exceeding $1 billion. The company's operational efficiency and strategic expansion plans have positioned it as a dominant force in the mining sector. IREN has also been actively diversifying its operations by integrating artificial intelligence AI cloud services. This involves repurposing some of its Bitcoin mining application-specific integrated circuits ASICs for GPU-based AI computations at its facilities. This dual-use strategy allows IREN to capitalize on the burgeoning demand for AI infrastructure while maintaining its core Bitcoin mining operations. The company's commitment to expanding its data center capabilities, including the development of advanced facilities like the Horizon liquid-cooled site slated for Q4 2025, further underscores its forward-thinking approach. IREN's impressive output of 728 BTC in July, surpassing that of other major miners, highlights its operational prowess and competitive edge. With over 90% of its mining fleet currently activated, IREN continues to leverage its infrastructure to maximize production and maintain its leading position. The evolving landscape of Bitcoin mining, marked by such significant operational shifts and the emergence of rare technical signals like the hash ribbon flash, warrants close attention. Analysts suggest that monitoring hash rate trends and the strategic decisions of major miners like IREN can provide valuable insights into the health and future direction of the cryptocurrency market. This rare signal serves as a reminder of the interconnectedness of mining economics, technological advancements, and the overall health of the Bitcoin network, potentially signaling a new phase in the mining power distribution. And that's a wrap on today's top stories. But before you go, let's do a quick recap of everything we covered. And that's a wrap on another packed episode of Bitcoin Bulletin. We saw Tether bringing USDT natively to Bitcoin via the RGB protocol, promising more privacy and utility. MicroStrategy's aggressive Bitcoin Treasury strategy is facing tough questions about its long-term sustainability. Key on-chain levels are being eyed for Q4 2025, potentially signaling the next major Bitcoin price move. And a rare hash ribbon signal indicates a significant shift in Bitcoin mining power is underway. Don't miss out on any of these crucial updates. Make sure you're subscribed, hit that notification bell so you never miss an upload, smash that like button if you found this valuable, and let us know your thoughts in the comments below. You can also follow us on all our social channels for more real-time updates. We'll see you in the next one.